Good morning. It is Saturday morning, the 16th of January. This is Ron Brown speaking. Markets are closed on Monday for Martin Luther King Day, so we have a 3-day weekend. Next week, I would probably expect a very volatile market depending upon what happens around Washington and at the state capitals this weekend. It's a very dangerous time both in this country and the markets. I haven't seen the markets break down yet at all. Yesterday was a little bit scary, but for now they're still intact. What I'm going to do today in this video is a little bit of top-down analysis, and I may do another video since it's a 3-day weekend later in the weekend. I'm not sure about that, so don't count on it. Where I'm going to go here is in my market analysis user groups. If you're an Insider Club member or a trial user, you have these. I keep these updated, and this is where I begin my analysis. I'm going into Major Markets Plus. I'm going to click through to the warehouse view, and now I'm going to select under my warehouse views, top-down process for market analysis. So I'll click on that. Make sure I'm sorted on raw combo. I'll make this larger so we can see the whole thing. Close this, and what is my combo ranking? Combo rank. If you look up here where the mouse is, it's percentage price change 1 day. So that brings the ETF or the index with the greatest percentage price change 1 day to the top of the list. And you can see that the UVXY, the ultra short VIX, is at the top, up 3.9%. But let's look a little further across here. You can see that for 5 days it's up 6.8. Beginning of the year it's up 2.3, but this right here tells me that the VIX only closed about halfway up its daily range. So that means there was not a tremendous amount of conviction by the time the market closed. Let's bring up a chart. Make this chart larger. This is a standard BPA chart which I use under my context analysis charts. It's number 1A. 1 is just a plain chart. 1A, I added the BPA flags. You can see that there has been a lot of congestion in this area. Several BPA flags. This is so low because the market's been going up, and every time the market falls off a little bit, you can see that traders rush into this. Let's change this to a weekly. You can see how low this Ultra VIX is now. Now back in March, you can see it got up to this ridiculous level of over 133. It's been falling pretty much since, and it's down here in the accumulation range. Now this is an ETF. We don't have access to the VIX anymore, so I substituted this. I'm going to go back to this chart right here. Let's look at the natural gas fund. Now natural gas, it's been, well, as you can see, it jumps all over the place. A lot of gaps there. I guess you get on and you hope for the best, but here's a selling climax. What makes this a selling climax? See the high volume bar? I need an arrow is what I need. Here's a circle. Gap down, sold off, but closed near the high. So that was an excellent call on the VPA flags for a selling climax. And then here's the confirmation of the move up. Another one, and it's been hanging around this area right here. Support and resistance, but that move off the low is a pretty good percentage move. Now we're obviously in January, and the anticipation, I assume, is that the demand for natural gas is going to continue higher. But I can't trade a chart like this. I don't even consider it. It's strictly a guess. Okay, utility average. Utility average was up for the day. It's in this congestion area. At these prices, I only look at the utilities. The dollar index been in a free fall with all the stimulus, but recently it's been finding a bottom. So I'll make this full screen just so it's easier to look at. So where is the weakness? Well, I put this Bitcoin investment trust in here just so I could track HCSI somewhat in HCSI, or I can follow GPTC, which is an investment trust. I understand the fees are really high in it, but it's a way to play Bitcoin if you don't want to lay out $37,000. But you can see that on Friday it was down, and let's see, the percentage range was in the lower third. So there was definitely selling in this trust on Friday. Let me bring that chart up. You can see the risk in Bitcoin. Yes, there's reward, but there's also tremendous risk. This traded up to over 48, and where did it close on Friday? 39.34. So anybody who chased this and held is in a losing position. Now I'm going to pause for a second. I want to bring the current Bitcoin chart over. This is Bitcoin to the US dollar, and you can see that the daily chart indicates that it got up here in the $42,000 area, sold off hard. I mean, that is a very hard sell-off, and the long wick indicates there were buyers in there. The next day, though, it was uncertain. And then on what is this? 13th, it moved up. 14th, the bulls were very excited then, and then another pause, and now this is showing a spinning top. So it's kind of directionless right now. If you go to investing.com and subscribe, or you don't have to subscribe, but if you do, you get rid of all the ads, and you can track Bitcoin live here now. It gives news and it gives signals, and this was a bearish reversal candle right here is what it's pointing out. Now I'm going to take a quick look at the 5-minute chart, and this is current. It says the market's closed, but Bitcoin never closes, and you can see that it's going lower at this point. Very dangerous unless you have a lot of capital. I think it trades options, but I believe I looked at them and they were ridiculously priced. The spread was. So just want to point that out to you, that you can go to investing.com. I've subscribed to it for the year. It's very inexpensive. A lot of good news here, and then you can keep track of the markets. So after all that, I decided to put this in just to keep track of it. What else was weak on Friday? Gold miners, silver trust. This is one of the ARK funds. I've put the ARK funds in here because there's so much interest in them, and they performed extremely well. So I thought they deserved to be put in just as a way to track the market. Now let's take a look at the ARK funds that I have in here. I'm going to sort by name. And if you look over here, you can see that these funds are all near their 52-week highs. My thinking was, by putting these in here, we can get a feel for if these leading stocks and funds, if they start to break down, that's a pretty good indication that we may be going into a correction. Now, I've also got, let's see, the Innovator IBD Breakout Opportunities. This is only down 3.1%. So if you follow these funds, like I said, it's a pretty good idea, or a pretty good way to track the leading stocks in the market. Let's just run through these very quickly, and then I'll look at that. Well, I've got two Innovator IBD funds in here. Here's the 50 and the Breakout Opportunities. Let's just run through these very quickly. So this is a daily chart. You can see how strong the ARKQ has been. It looked like it was going to go up more Friday, but we got a effort to fall, so be careful. Very heavy volume there. Let's go to the next one. Same thing, a breakout and a breakout failure so far. VPA flags are indicating an upthrust, sign of weakness. ARK Innovation, same thing. These VPA flags often work out, so be careful. Another one, not quite as strong a signal. High volume down bar after an up move on high volume indicates weakness. And one more. And we just got an effort to fall on this one. Let's go down and look at the IBD 50. No flag on this one. But you can see that on Thursday there was what's considered an upthrust. It's not quite a shooting star for candles, but it showed some weakness. And now on this, the IBD Breakout Opportunities, it was a breakout early in the day, but by the time the day ended, you can see that an upthrust bar after an up move, a sure sign of weakness. So we're getting some warning signs here. As far as looking at the indexes and so on, I did that earlier today, and I'll try to get to that right now. I haven't seen a huge breakdown yet, but since these have been leading stocks or leading ETFs, I just wanted to point out that we are seeing some weakness based upon reversals at the high and the VPA flags. Okay, so I'm still in Major Markets Plus. Going to click on this. If you go down to number 1B, no ETFs, that eliminates all the ETFs, and you can just get a pure look at the indexes. I don't know why this is now named pseudo S&P 500 index, but it is. Here's another pseudo 100. And this one shows up. It's not an ETF. That's why it is not eliminated. So we'll have to live with that. Anyway, all of the major indexes were down. Where did they close? Utilities closed very high on the Wyckoff, but down, 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 and the rest are mid. So we're seeing some weakness here. Let me bring this one up. No volume on this, the Nasdaq 100. Let's take a look at the Nasdaq Composite, which does give us volume. You can see the volume fell off compared to the prior day and compared to all of these volume spikes here, where it has kind of struggled over the past several days. For the market to break, the psychology obviously is that this thing's going to go up forever. But for those of us who have been around a long time, and that includes me, we know that isn't the case. So just be careful. It's time for discipline to make sure that you're not risking too much, and if you are playing the long side, make sure that you know where you're going to get out. If you use stops, yes, you can get stopped out and the market can reverse and go up, but that's just the cost of doing business. Okay, I'm going to go down to major market ETFs. This time I'm going to go down to the next folder, just take a quick look at the end of day. And this gives me a feel for what's happening in this ETF folder. Here is where home construction shows up. You can see the bonds are up. Dollar index with bullish tips. We're slightly positive. And the biotechs have held up. Silver, gold. Here's these ARC funds again. Down near the bottom, down 2.8%. If you want to look at just the spider ETFs expanded, I have all of the spiders in here. Utilities, communications, here's healthcare. Healthcare was strong. Home builders again. So you can just look down this list and see where the strength and the weakness was. Energy is at the bottom. It has been very strong. You can see that, and had a little sell-off on Friday. Next, I'm going to drop down to my actually, let's go into the industry groups in HCSI, but I'm going to change my view. Basic score, top-down analysis. I'll go to, this is the percentage price change one day. Here's healthcare, I mentioned that. Home builders. But if I go down to number 3, it sorts by advancing issues versus declining issues. Utilities, insurance brokers, healthcare, large pharma, home builders again. So you can get a quick look at the strength. And if you go to the bottom here, the weakness. Steel was down 0 to 9, sporting goods down, and so on. So you can get very quick reads there. Now I'm going to go back up to my broad market. Well, we can take a quick look at sectors since I landed there. Utilities, healthcare, consumer staples. Here you can see energies at the bottom here also. This is sorted by advancing issues versus declining issues, and you can see the numbers over here. Now, to finish this up, I'm going to go to the broad market indices. Pretty much, well, utilities on top. I was going to say pretty much the same picture, but that's not necessarily true. You can see that all of these indexes, which are calculated by HGSI, were red on Friday. Here's the large cap institutional index, which held up pretty well, only down 1.2%. What I want to do is I'm going to take the broadest look at the market with the S&P 1500 index, and then get a click on the quick pick HGSI index charts. I'll just run through these very quickly and call this market analysis good, but you can see that the A's have started coming down on accumulation. The E's have really not moved much, but we are losing some momentum on the A's. Now, the next one is just it shows you the A, B, C, D. The A's are coming down, but the B's are going up, which you would expect. The C's are flat, the D's are flat, and the E's are not doing much. So we're not. I'm not seeing a lot of distribution on this yet. This was A accumulation, and it has dropped down to B accumulation. Now this is the accumulation distribution chart using the Chaikin money flow. You can see the percent AD velocity and the percent AD are both going down, so that indicates a momentum loss, and you can also see it in the histogram here. But if you look down here, this is the 200, the 50, 100, the 50, and the 18. The trend is still up. Here's the advanced decline line, very strong. In this box over here, there were 425 advancers and 1057 decliners. Wrong thing. Okay, I'll move down. These are the percentage of stocks above their 20-day, 30-day, 50, and 200-day moving averages, and you can see that the momentum is coming down. Now, this is just the S&P 1500. You can do this on any of these indexes, and you'll get a different picture. But I just wanted to use the broadest picture here. Now, it was not a 5-to-1 down day. It was a 3-to-1 down day on the decliners versus the advancers. The force index 13 still positive. The 2 did turn negative, but the volume point of control stayed green. So the evidence is that the trend is still up. The 3 has not crossed down below the 6. Here's the AD line again and the percent above the 50. Just a different look. A new high-low line. I'm not going to spend any time on these. This is the 3 crossing the 6 to the downside and then back to the upside. When it crosses back down, you'll see a red bar there. McClellan oscillator, it's neutral. Doesn't tell me overbought or oversold. Really says nothing. And then this is the trend chart. And what does the trend say when I click on here? It says long is up, medium's up, and short term is down. So there is a momentum loss. As I said earlier, the markets are closed on Monday. We'll see what happens. Inauguration day could be very volatile. So just be careful. We're seeing some cracks, but we're not seeing any really confirmation yet. Keep your eyes on those ARC funds and the IBD funds in the first screen that I showed, and you'll get a feel for what's going on. I mentioned earlier I may do another video over the weekend. That depends on how much time I have. But if not, have a great weekend, and I'll see you online on Tuesday if you're in the Skype group.